What's going on, good people? Welcome back to another episode of Trading My Funded Account. Today is day number 41. It's December the 7th, 2023. We made some trades today, so let's get into it. First thing we need to talk about today, let's talk about yesterday's closing price. Now that right there is represented by this purple line right here at 36,111, and that played a very important role today. So let's go ahead and talk about these trades that we made today. All right, so trade number one right here. So I went long here as prices retested higher low A, but I tightened my stop a little bit too much on this one. And one of the things that I'm really starting to realize about tightening up my stop is that it's really more of like a mental game that I'm playing with myself, because on any of my best trades, I never tighten my stop. But anytime I tighten my stop, it's usually on a trade that I subconsciously feel like it's just not the best setup. And because I subconsciously feel that way, I do something to try and protect myself. So I feel like more than likely, if I think that I need to tighten my stop on a trade, I should probably just either not get into that trade, or if I'm already in it, just get out of it, because it's not the best possible setup. And when it comes to trades 1, 2, and 3, I just feel like all of these trades should have been skipped, because the price action really wasn't all that well defined in my eyes. I couldn't really get a good hold on where exactly the market was going. So I should just wait it out until I see better prospects, because right here where we're looking at, this was 15 minutes after the market opened. So it's very unlikely that the market is just going to play back and forth within this very small range for the entire session. More than likely it's going to break out one way or the other, and when it does that, then that's when I should participate. And that's really one of the biggest things I learned from this entire section between trades 1, 2, and 3. So let's go ahead and talk about trade 2. Now right here at 2, I entered again as prices spiked back through my entry from trade 1. My break even got hit on this one. Now trade 2, that would have been a legit entry if I was trading in a price action scenario where I understood exactly what I was doing. But because I didn't understand what was really going on, trade 2 and trade 1 still are trades that I should really try and avoid the next time I run into a situation like this. And then on trade 3, this was a trade that I went long on based off of what I thought was a higher low right here. So I looked at it as we made a double bottom right here, and then we had a higher low. So I'm like, okay, bet I should be going long right here. We had a higher low that got formed right below yesterday's closing price. So I'm assuming that that higher low is about to break prices up past yesterday's closing price, and then eventually come back up to either retest this level or this one. But that just wasn't the case, and I ended up buying at what turned out to be the top of this overall range, because really the range was between yesterday's closing price at the purple line and the green level of support down here below from higher low A. So that was the range right there, and every time I went long within this range at 1, 2, and 3, I bought higher than I should have. If I was gonna go long, I should have been buying at support down here, but I really didn't realize all of this until I looked back on it a few minutes ago. So I think that in the moment when you can't really recognize what you're seeing, you don't just want to start taking trades hoping that it'll work, because you can dig yourself into a pretty big hole very quickly if you go about that path. So you got to make sure that whenever you don't understand something, just take a step back, give yourself like a 10-minute timer. When the 10-minute timer goes off, take another look and see what exactly is going on, and see if you can understand exactly what's in front of you. Now, when it comes to this overall price junction, that's pretty much the biggest lesson I learned. If you don't understand the price action, just wait until you see something that you do recognize. So let's just talk about higher low B really quick, because this right here was very interesting, because it's almost an exact carbon copy of a prior setup that I missed a couple of weeks ago, I think a week ago. And I was like, man, if I ever see that setup again and it occurs in the same way that it did before, I want to make sure I get into that trade. So let's go back to that day that I'm talking about. I'm talking about November 30th from this year. So it's just a crazy coincidence that higher low B that I'm talking about today was also higher low B that we're going to talk about from November 30th. So check out how between A and B, we had a higher low right here, but prices were really kind of going above and below the higher low, not really necessarily respecting it all that much. If you look at higher low A right here, we have a very similar scenario where prices are going above it and below it, not really respecting it that much. And then eventually prices broke out to the upside and made that higher low. If you look at what happened on November 30th, prices also did the same thing here. They broke out to the upside and then came back to make a very clearly defined higher low that I could have taken long and at least taken it back up to the top of structure right here, or maybe even further, but who knows? You know, I never got into that one. So I saw the same scenario today and I was like, ooh, that looks exactly like it did the other day. So I was trying to get into this trade so bad. I had my order, I think, at 101, but the high for this, the low for this candle was 102. So it was all good. You know, I don't want to chase the market if it moves without me. So I just decided to go ahead and skip that entry. And I just say all that to say that sometimes in the market, when you miss your trade, you just got to let it ride. Don't chase it. Don't try and revenge trade. Just say, look, the market is going to be open for how many more hours? I'm pretty sure I'll have plenty of opportunity. So when that time comes, I'll be ready. And that time came right around higher low C. So notice how after we made higher low B, we pushed up, created higher low C, pushed up one more time to finally retest and establish a level of resistance up here at D1, which would pretty much play a very major role a little bit later. So we'll talk about that very soon. So let's talk about trade 4 right here. I went long here as prices came back to retest the higher low support level at C. So I went long initially one time, but I didn't really like the fact that the selling was so strong coming back into this level. So I said, you know what? Let me wait and see if prices really want to bounce. And then if you look at it, look at where I went long right here on this first entry at the blue triangle. Support is down here. My entry is up here towards the middle. So that's not really the best entry. If I had to grade it, I would give it like a B minus because it was decent. It wasn't bad enough where if you take that trade, you'll get stopped out. But still, you want to make sure that you still build good habits. And the best habit that works for me when it comes to the higher low setup is buying as close as I can to support. So once I realized all of those things, I just decided to get out while the trade was still break even. Because I can't even recall how many times I had an opportunity to get out of a trade that I know wasn't right, but then I just hesitated, and then before you know it, it went and hit my stop loss. So I got out really quick right here on C, well, right here on 4, and then I entered again the second time. So when I entered again for the second time, I had an opportunity to take prices all the way back up to resistance right here. All right, I had that chance, but I got a little bit greedy because I was aiming for this little wick right here. Because anytime you have a move straight up and then it comes straight back down, what you really want to do is find that point where the market reversed. So pretty much find the apex of that V pattern. And then you want to find the low wick in between that kind of is sandwiched in the middle. And then that's where you want to aim for prices to come back to. And if you look at it, that's pretty much where prices came back to on this swing right here a little bit later, but it just didn't occur on D1 or trade 5. So I definitely got a little bit greedy right here because I had an opportunity to take my my normal scalp profit target. It was there, but I was like, nah, I'm gonna add to my position and then I'm gonna take both of those trades back up to that level. But that's not how it played out. So let's talk about trade 5 because that's where I actually added to the position that I had from trade 4. So at trade 5, I added here once prices made a higher low at D. So when it comes to adding to a position, I did it perfectly right there. I saw another higher low get formed, so I went long right there. And that's a good idea, but I still got to be cognizant of the fact that we were kind of establishing a little bit of a range right here. The range, in my opinion, isn't really all the way 100% defined until you make that third touch. But this right here, 1 and 2, that should have been enough for me because if you really look at where we came back up to, we came back up to retest the lows for the 9:30 open candle. So, you know, the 9:30 opening candle usually is going to have the highest volume candle for that entire day. We always talk about volume and talk about how volume is so important. So whenever you have that low volume, that high volume candle, it's either going to be the high, the low, the open, or the close that plays a major role when prices come back to it, whichever one of those 4 it might be. In today's scenario, the low for that 9:30 candle was the major resistance level that lasted pretty much for the next 3 hours. So for me to not get out right here when prices came back up to the top, that was me just being way too greedy. It was no signs in the market that said, hey, Ty, the market is going to keep moving up, so just hold that trade. You know, I had plenty of opportunities and plenty of signals to tell me to get out, but I let the greed get the best of me right here. And this entire trade came back to break even. So that was tough because I was like, man, I could have had my scalp target and then just kept moving along and waiting for my next best setup. But that's one of the things I just got to work on. You know, hey, even though you see where prices could potentially go, just go ahead and get out at the most logical levels. Don't try and shoot for the moon and hit a home run if the home run is not there. So I think the one last thing about trade 5 and 4 is that the last sign that told me I should have got out was D1. Because look at D1 where this blue circle is. This right here is a lower high. So one of my biggest rules is that whenever I'm in a long trade and then I see a lower high, I don't care what the scenario might be. I don't care if the market just moved up by 1,000 points. If I see a lower high and I'm long, I got to get out no matter what the circumstances might be. And I got to get out immediately. Now, I had a chance to get out at D1 immediately, but I said, nah, you know, maybe they might blow past the lower high and keep going up. I don't think that ever happens. That's not how price action works. So I had a chance to get some type of profit, but I didn't. But I learned a whole lot from D1, trades 4, and trades 5. I learned a whole lot about managing your risk and not being too greedy and taking exactly what the market gives you. And that's very important. So let's go ahead and move on to trade number 6. Now, right here at 6, I went long here as prices retested the higher low support level from E. And then I took this back up to the previous lower high that we were talking about from D1. Now, this right here is a perfect textbook trade that I'm looking for when it comes to the higher low. On this specific scenario, I took 2 different trades. Well, 2 of the same trades, but 2 individual trades. The first time I went long was the first time it came back to retest that higher low support level. But I really wasn't quite sure if this level of resistance was going to hold up and then prices will come back down to test yesterday's closing price. So I said, you know what? Let me just get out while the trade is still somewhere near break even. But then when prices spiked back up and got back above support, that's when I took trade 6. So when it comes to the market, sometimes you might get that first entry, but you might have to kind of probe the market and go back and forth, kind of put your foot in, take your foot out real quick, and then put it back in if you feel like everything is good, just to make sure that you're getting your best possible entry. And that was something that I did a lot today. I did that on trade 4. I did that on trade 6. I did that on trades 8 and 9. So very common sometimes in the market. And that's something you might have to do from time to time, especially when the trend isn't really all that strong. So then I took that back up to D1. Okay. And then we move on to trade number 7. So let's talk about 7. So at 7, I went long here expecting the support level from higher low F right here to hold up, but I exited quickly when I saw that prices didn't bounce up from support the way that I wanted it to. Now right here, I was definitely pretty sure that the range had been established because we had one touch here, another touch at D1, and then another touch after the higher low from F pushed up through the top of the zone and then came back to get back into that overall zone. So let's talk about the range that I was looking at in general. So the range was going down from this low at 36,075 all the way up to this high at 36,150. And then we had a midpoint in between the range where yesterday's closing price was at 36,111. So that was pretty much the structure that I was looking at when I'm talking about these trades that I'm discussing. So I was pretty sure that this was the top of the range, and I was conflicted a little bit because I saw the strength of the uptrend, but I also saw that we were moving up to the top of the range. So I said, okay, I know I'm not really supposed to take that higher low, that last higher low that comes before the range gets broken, because more than likely that'll lead to a false breakout, and you don't want to go long as prices are coming back into the zone after a false breakout. But because I saw both of those signs, I'm like, man, I could argue the long side and I could argue the short side, but I'm gonna take the long trade anyway. But if I don't see exactly what I want, I'm getting out of the trade really quick. Now, this trade ended up as break even, so it's not bad right now, not today. But I would say in the future, that probably shouldn't be a trade that I take, because what about the days where prices don't really play around like they did right here? They gave me about 3 candles to get out at break even if I wanted to, which I took advantage of. But what about the days where prices hit the top of the range and then they just shoot all the way down? There is no playing around. They're not giving you a chance to get out. They're shooting all the way down to your stop, and they're going to keep going past that. So on days like that, I would definitely take a big loss on trade 7. So I think going forward, that's something that I just got to avoid. And I think I talked about it yesterday and the day before, talking about how you don't really want to go long at that last higher low that occurred right before the breakout happened. You don't want to take that. Well, at least I don't, based on the way that I trade. And trade 7 is just another example of that. And luckily, I was able to not take a loss today, but definitely learned my lesson from that one. So let's move on to trade 8 down here once we came back to retest this major level of support. And while we're at it, let's actually talk about what this blue line represents, because, you know, as I was talking about yesterday, we have non-farm payrolls coming out tomorrow on Friday. Now, the day before non-farm payrolls comes out today, which is today, not usually, you always have something called ADP unemployment. So that's pretty much like a sneak preview, really, of what the employment number might be. So that level, wherever prices were at when that news came out, that level will probably play a major role. So if we go back and follow this blue line of support all the way across, that's exactly where I drew that level from. Notice how the news came out right here at 8:30. The top of that candle was right here. So that's where I drew my line of support, and then I extended that across. And it's interesting because the market just pretty much came back to test that level multiple times throughout the day. And, you know, that's kind of crazy, because I saw the same thing happen yesterday when we had news come out at 8:15. Prices came back to retest that level, and then they saw a large uptrend that moved away from that price level. So it's not something that I'm too familiar with, but it's something that I'm kind of picking up on. So that might be something that I study in the future. But anyway, let's talk about trade 8. So trade 8, I went long here as prices retested the higher low support level from G. And right here, I got into a similar situation that I did on 4 and 5 and also on 6, where I'm probing the market, trying to see if the entry that I want is there. And if it's not, I'm quickly getting out. So that's what I did on trade 8. Was able to save myself from taking a loss as prices came all the way back down to retest support one more time. But then at trade 9, when they spiked right back through my entry price from my original trade at 8, I got right back in. And then I was aiming to take prices back up to yesterday's closing price, not too far above from where I got in at. And then I just added to my position right here on trade 10 as prices started to get a little bit closer to my target. I took all of those and then I exited at yesterday's closing price. So that right there was a textbook way to trade the higher low when prices spike back through your original entry. And that right there brings us to the last trade of the day, trade number 11. So let's talk about that. So at 11, I went short here after seeing a rejection of the range right here at I, followed by a lower high at J, right here where this blue circle is, and then seeing that lower high from J actually lead prices to break past that support level that was established from higher low H. And then that's when I shorted and I took prices back down to yesterday's closing price. And after that, I decided to call it a day. I feel like overall, I played this market very well today on the back end of it. I would say trades 4 through 11 were pretty much all legit trades and very good entries on my part. Only one I would say that wasn't a good entry was trade 7. We talked about that. Just got to avoid that last higher low that got formed before a breakout happened that pushed prices out of the range. You got to avoid that at all costs. But other than that, I would say trades 4 through 11 were pretty solid. 1 through 3, I got to clean that up, because I've had a lot of days where, a whole lot of days actually, where I got so caught up in the beginning phases of the market trying to force something that wasn't there, trying to force a trend that really hadn't materialized yet. And then I end up digging a hole. And sometimes I dig a hole so large that I end up hitting my daily loss limit. My account gets locked out. And then 5-10 minutes later, I see something like this happen. And then I get to look at all of the opportunity that I could have participated in if I didn't hit my loss limit so quickly in the day. So I think right here, I could have definitely went down the wrong path, but I'm glad I didn't. But it's still something I got to work on, because if it's not there, don't force it. And I think that just really comes back to patience. You got to understand that the market is open for 6.5 hours between 9 o'clock, between 9:30 and 4 o'clock. So within that first hour or so, If you're not seeing the move that you want, it's all good. It's no rush. The market will give you opportunity throughout the day. It's just up to me as a trader to be patient enough to wait for that. So I think that's really the biggest thing I need to focus on, just being patient and disciplined, because tomorrow I'm going to need to bring my A game to the charts, because we have non-farm payrolls coming out. Volatility is going to be through the roof. So all of these little simple mistakes that I made today, if I make those tomorrow, I think the probabilities of me taking real losses will definitely increase by a lot. So I got to make sure that I come in and do the right things, follow my trading plan the way I know I'm supposed to, and I think everything should be all good. So overall, today was decent. I finished with a profit, so I'm not mad at that. Just got to clean up these little mistakes and then focus on continuing to do the things that I know work for me on a consistent basis. And I feel like I should be able to come back tomorrow and close the week very strong. So that's all I got for you guys right now. I hope you learned a lot about just trading ranges. I hope you learned a lot about being patient when you can't really recognize the price action that you're looking at, and just making sure that you stick to your trading plan. All of those things are very important, and I hope you learned a lot, because I definitely did. But I'll be back tomorrow on Friday, December the 8th, 2023, ready to do it one more time and close out the week very strong. But until then, you guys, have a good one, study hard, and take it easy.